everybody. Happy Monday. This is the morning show, Stock Market TV. Spencer, JC, Steve, Alfonso. What do you want to talk about today? You want to talk about, like, I don't know, bonds and rates and currencies? We want to talk about meme stocks. Let's talk about meme stocks. Let's talk about GameStop. Let's talk about AMC. We are back, baby. Meme stocks are back. It's meme season, summer of memes, whatever you want to call it. We are so back, and we got charts. So that's what's on our list for today. We'll be joined by Jay Woods in a few minutes to talk about whatever's on his mind. Hopefully it's meme stocks. We'll have Ian Cully on the show to talk hopefully meme stocks, but also some fixed income, some rates, some gold, all that, all the other stuff, right? But it's meme season, baby. Let's roll. Who's hyped in the chat? Are you hyped? Phil, Donovan, Dawson, Mary, Trent Spotter, Zach, Todd, yes, Joe. Other words I can't pronounce. Josh, you're hyped. I'm hyped. Let's boogie. Meme season. Back.
Are we back? Are we back? I think we're back. Is it official?
Did we ever leave? We left, but now we're back.
Where'd we go?
Roaring Kitty is back. Roaring Kitty is back in the house. I got a flex. You ready for my flex?
We're going to start with this.
Ready? You ready for
We're
my
going to start
flex?
with GameStop.
Nope. Ready for my flex?
Mm-hmm.
Here's a trivia question. Who is Roaring Kitty's favorite technician?
Is it you?
Any
Jason.
guesses? Any guesses?
He's more of a balance sheet guy from what I've heard.
This guy, Roaring Kitty, loves this guy. Roaring Kitty only follows 93 people. Guess who's one of them?
That you know what? That is a flex. Not all flexes are flexes. That is a flex.
That's a pretty good one, huh?
Good on you. Good on you.
Just
What
like
can I tell you? You know,
just
the Roaring Kitty digs my charts. No big deal.
so does the public reporting department at Trump Media, apparently.
Yeah. Probably. Look who's got a nice tan, by the way. Spencer, look at this. Get some sun, buddy. Look at Strazza. You see this guy? Come on, buddy. Get some sun.
I did a double.
I don't go outside. It rained all weekend, man.
Not here.
Strazza leading the league. Best tan in the morning show. I see
And
you,
it's
dog.
all natural, you know?
It's that Italian skin you got going on.
Yeah, it's real.
I feel you, dog. I feel you. All right, can we talk about markets, please? Let's go. Let's
All
go.
right.
The chat is right, by the way, Spencer. You got to bring on the Roaring Kitty.
I will
Can we
do
get
my
him on?
best. I will do my best.
All right, let's go.
Apparently
Let's do a little.
he goes on Twitter like once every 4 years now. So
Well, he's back now. He's back.
yeah.
Here. All right, so we got the Dow futures are up 35 points, pretty much flat this morning. S&P futures up 20 basis points, about 10 points, 52.50 for S&P futures. Dow futures just under 40,000. Can we get it? Can we get it? Nasdaq futures down about up about 1/3%. Russell 2000 futures up 0.5%. Crude oil hanging out at 79, up almost a full percent on the day. Gold down 1%, 23.50 for the gold. Silver flat this morning, 28.5. And you got the dollar slightly lower with euro up. 10-year treasury bond is down. Volatility index up a little bit, 13 and change. And over in Bitcoin, getting some serious action on the BTC. A lot of action in some of these meme coins. We'll talk about that in a minute. But let's just get into the Bitcoin. Bitcoin up 2%, $1,200, just under 63,000. Ethereum just under 3,000, up 1% and change. Switch to my order here, so I don't have everything handy. Solana, up 1.6%, 146. Total crypto market cap, Spencer Israel, $2.23 trillion. What are we thinking this morning? What's on everybody's mind?
Well, if we're talking meme stocks, you know what's interesting to me is the last go around, right? 2021, we did have meme coins too. They did exist, but we didn't have as many of them, and they weren't as well known, and they weren't as liquid for sure. Now, if it is really meme season again, how many meme coins do we have, JC? An ever growing number, right? And they're more liquid and, dare I say, more mature, maybe as mature as a meme coin can be.
What do we call it?
What?
What's the principle there? The longer something stays around.
We've talked about this before. Oh shoot, god damn it! Why can I never remember what it's called? But yes, to your point, the longer something stays around, the more likely it is to keep staying around. And so we don't just have meme stocks; we have meme coins, and we have more ways to play this, which is fun for me and should be fun for you.
Let's start with the big news of the day. Roaring Kitty is back. This is the Kathy Wood of meme stocks and short squeezes. This is the Warren Buffett of the memification of finance. This is the infamous Roaring Kitty. Lindy effect, by the way.
So what did he do?
The infamous Roaring Kitty making an appearance on the old Twitter last night.
So first time
he tweeted, big deal or no deal, Strazza? Big deal.
Well,
or no
let's explain what happened first. This is the first time he tweeted in how long?
3 years.
21.
3 years. And what he's doing is tweeting out a picture of himself sitting up in a chair. GameStop has started to squeeze off of the April lows. If you look at it right now, this morning, it's up about 40% pre-market. The stock would be up about 150% from its lows just a couple weeks ago. So the squeeze is on. And Kitty is saying, I'm paying attention. So this is how I know here today, coming to my desk, that markets are efficient.
Right. So the efficient market hypothesis, this is all of us laughing at the fools who still believe that. It was just a hypothesis. It was proven wrong.
Yeah.
It was a random walk theory, which again was proven wrong. In practice, it is hilarious if you think markets are efficient. And I will finish this conversation so we can get on to actually important things, is that markets are almost efficient, which by definition makes them inefficient, right? We had a great conversation with Jack Schwager about exactly this. If you ever want Jack Schwager to have a conversation with you, make sure to talk about the efficient market hypothesis, and he will talk to you for hours. See, that's the cheat code. Spencer, why don't you drop the link in case anybody missed our conversation with Jack Schwager about the efficient market hypothesis, or the deficient market hypothesis, as he likes to call it. So that everybody can see it. It's fantastic.
All right, I just want to talk about GameStop for 1 second before we move on.
Throw up the chart, slide 3 there, Spencer.
Throw up our freshly squeezed table first, please.
Oh, hold on. Throw up the GameStop first. Throw up the GameStop, and then we'll talk about the rest of them. This is a big one. This thing's up 40% this morning, bro.
Trying to talk about it.
Look at this thing. So big move on Friday. What was the move on Friday? We have the data. The big move on Friday was actually Thursday.
Yeah.
It was actually like
it's the past couple of weeks.
Last couple of weeks. Yeah.
So again, we're more than a double off of those April lows. What if I told you, so this shows the price level pretty clearly. What if I told you this squeeze was just getting started? So we're tracking all of the most heavily shorted stocks in our freshly squeezed table. Throw up the table. Let's just check out the GameStop stats quick. Still, we say Carvana's kind of like the new poster child of the squeezes.
But GameStop is the OG.
Still number one. GameStop's
the OG, but Carvana's the poster child of this cycle.
Table.
Right, Strazza?
Yeah.
Carvana's the poster child of this cycle.
Yeah, but look at these numbers. Look at these numbers. 10 days to cover, a quarter of the float held short. These are monster short numbers. So I think, a little 140% off the lows in a couple weeks. This is nothing. Now throw up the PPO chart. JC's been really into monthly MACD crosses. Are you still on that?
For natural gas, just to be clear.
I'm not making fun. I'm making fun, but I like it too. Look at this monthly PPO. PPO is the same thing as MACD. You would barely be able to see the MACD if I use that on this chart. So this is just keeping everything consistent in relative terms, getting across just about on the monthly, just about. So we have the short interest, 10 days to cover. That's crazy. Breaking multi-year trend here with big time momentum, clear level of polarity right here, hooking higher. You could call this a little bear trap, right? So the squeeze is definitely on. And if you're able to zoom out, I think it could just be getting started, right? GameStop, go do this for yourself, because I could tell you the number, but you're not going to believe me unless you check it at home. GameStop, you see it ramp up in 2020 into early 21. That was 12,900%, almost a 13,000% rally. So just for context, we're up about 140% off the lows from last month here.
Carvana's up 2,000% from last year, from the beginning of last year. I mean,
Carvana's just a beautiful chart.
Yeah, I'm just saying, like, these are the types of numbers. It's not like, oh, 10% or 8%. Like, these are monster numbers. Getting great chat here. Great comments from the chat talking about Carvana is Kobe, GameStop is Jordan.
Yeah.
I don't hate that at all. AMC Pippin, AMC is more like BJ Armstrong.
What?
AMC is definitely not Pippin.
No,
so
Ames.
No,
Whatever.
like Doge could be Jordan and Sheba could be Pippin. Like, that's cool. But AMC's like BJ Armstrong, or like.
The more important point is this is a theme.
Disappointment.
The more important point is this is now one of the biggest themes in the market, in my opinion. Every day we're getting to our desks, we're looking at our freshly squeezed list, and we're saying, oh, wow, another one's going. We could show you more charts. Zim Marine Shipping comes to mind. That was one from late last week. But more and more of these heavily shorted stocks are finding some momentum and really blasting off. GameStop is not alone. So I think Roaring Kitty sees what we see, and he's sitting up in his chair. I like it. I like it.
Shout out to Roaring Kitty. Shout out. Big shout out. Welcome to our show anytime, Mr. Kitty. Throw up slide 6 just to zoom out here. So we've got the meme stock, the meme SPAC, and then we have the platform in which these meme stocks are discussed. This is where Roaring Kitty was born. This is where, GME and AMC and BlackBerry and all these other crappy squeezes that took place a few years back. This is where it all got started. So I think these need to be front and center. These need to be included in the conversation. Listen, AMC, we're making fun of AMC. Even AMC's up 14% this morning, just an FYI.
This is a great overlay because these are really cut from the same cloth, these two names. And you could see after the Reddit IPO, they tried to run it. You had that little pop like 4 days into the public offering. And look at what DJT did too, right? A little blow off top there. I like this.
And I think this goes back to what we were talking about last week, how you're getting the mean reversions from the leaders that are mean reverting down or have been mean reverting down, and the losers mean reverting higher. You're seeing China absolutely ripping. You're seeing these short squeezes absolutely ripping. You're getting rotation. The leaders are now laggards. The laggards are now leaders, but like from extremes, not like the ones that have been in the middle, but like really the extremes. And I think this is just another example of that. Let's talk about just the market environment that we're in, where the topic of conversation is these meme coins, simply because of the lack of other things. Throw up slide 8, 9, 10. Let's talk about those. So here we're looking at the value line geometric index. So this is the median stock. It's done absolutely nothing all year. Look at the ratio between high beta stocks versus low volatility. Just down for the year. Like these, and forget the one up top, because the one up top is the median stock, but the one at the bottom, high beta outpacing low volatility, or when it does, that's characteristic of a healthy market environment where stocks are doing great. Stocks as an asset class are heading higher, and that just simply hasn't been the case for most of the year. And I think that ratio between high beta and low volatility says it all. Now, with that being said, it's not like low volatility is outperforming high beta. Right? It's not like this chart is crashing. It's just going sideways. which again, I think really tells the story of what's really been happening in the market, as does the median stock in terms of the value line. Look at the small cap Russell 2000 and small cap S&P 600. Now, to be fair, these are the worst, least relevant companies on this here planet Earth. They really don't matter at all. But like the value line geometric index, really have done nothing, just trading sideways. Again, very similar to a lot of stocks and sectors that we've seen. And then here, slide 10, I think really tells a great story here. Really like this one a lot. You've got silver and copper up to over 20%, gold up 13%. And then the former leaders, the NASDAQ, technology, Bitcoin, consumer discretionary, all down on a rolling 10-week period. Again, I think it really shows what this market is like. I got one more for you, Spencer. Throw up the new slide too, the new one. This one breaks down all the sectors just so you could see that over the last 10 weeks since the beginning of March, we've got the leaders are utilities, energy, consumer staples, and then materials. The worst areas are the areas that are the largest representatives of your favorite indexes: consumer discretionary, technology, healthcare. You got the NASDAQ 100 actually down over the last 10 weeks. Dow and S&P pretty much flat. I'd like to continue to point out, Strazza, that relative strength that we're seeing in industrials and financials. Hanging in there, right? While consumer discretionary sucks, technology sucks,
It's
the
not
NASDAQ sucks, Bitcoin
No.
can't get going, but
Yeah.
financials and industrials are hanging in there.
It's not so much that these groups are falling. The risk appetite ratios rolled over in March, but it has more to do with the defensive groups or the denominators in those ratios really performing well, like shown here with XLU and XLP.
Yeah, there's only if you go to slide 12 there, Spencer. If you go and count all of the sectors that are making new 52-week highs, I encourage everyone to do that. It's not going to take you very long at all. It's actually only two. It's consumer staples and utilities. These are your market leaders. How you doing?
XLI too.
XLI is not making new 52-week highs.
It's not?
Nope.
Are you sure?
Yep.
Okay. Looks like we're there right now.
Nope.
All right. Well, sometimes we have same data but different charts. It happens sometimes.
Nope. I've got I'm counting the sectors that made a new 52-week high last week, and industrials did not. It's only two. Industrials were close, which is I just said it earlier.
Yeah,
Industrials and financials are actually very impressive how they're hanging in there, but the answer is no. Industrials are not making new 52-week highs, or did not, at least last week. It was only staples and utes.
Tracking it by percentage away, so I guess we rounded up and gave it to them. I guess we're pinching pennies here.
Right. So if you want to round up, you're welcome to do any of that. But what I said is that two sectors are making new 52-week highs, and industrials are not one of those two. You can round up all you want, knock yourself out. Actually, I think it's important. I think it's really important to reiterate that while these areas tend to be defensive, while these areas are certainly the leaders, the market is a mess. I continue to point to industrials and financials. And by the way, Strazza, not just the American ones, right? This is a global thing with financials and industrials. It's not an American thing.
It's been
America too, but it's a global thing.
It's been global. I think it's becoming maybe more global.
Yeah.
Participation is broadening outside of the U.S. for sure.
I mean, China.
But
hello,
financials and industrials overseas, like those have been strong trends this whole bull cycle. That's what's been driving Europe.
European banks are making new 52-week highs, by the way, European financials. American financials aren't there yet, but if European financials was a sector in America, then you could say that there's a third one, but they're not. But pretty damn important. European banks making new 52. When was the last time? We talked about this last week. When was the last time you could say European banks and relative strength in the same sentence with a straight face?
So
when was the last time?
I have no idea.
Been a minute.
I also don't know.
treasury spreads over here.
TR thinks that I'm being pompous and I'm wrong. Wrong about what? I'm just stating facts. What is it that I'm wrong about, Mr. TR? Giving me shit in the Slack. Strazza's always right. I wish Strazza was always right. Wouldn't that be nice? Strazza has opinions. What is it that I'm wrong about, Mr. TR? Love to hear your thoughts. These are just facts that I'm stating, so I'm not really sharing any. I don't think I've shared any opinions today. It's just facts only. No big deal.
Kind of surprised banks have been this strong.
I am too. You would think, right?
Yeah.
You would think financials, especially in Europe, would not be as strong as they've been. You would think, but they most certainly are. Now, Strazza, because of the messy markets that we're in, because of this defensive leadership, is that more of a reason to focus on the meme stocks? Is it more of a reason to focus on stocks and sectors with less correlation? You know, things like the Trump, things like natural gas, things like the things that are just not moving with the overall market, positive or negative correlation, just no correlation? Because that's where my head has been at. And that seems to continue to be the right mindset, no?
I haven't been betting on messy market. I'm just finding the trends that are still looking good, I guess. But I've kept it more directional and been fine.
Yeah. Well, it's about sector rotation, isn't it?
There's still plenty of things working,
Yeah.
right? Just trade those. I don't think you need to overthink the uncorrelated. Like, sure, I'm in nat gas. I like that.
Are you already in it?
Yeah, I'm in it. But I think you could just buy the stuff that's still working also. I don't think, in fact, I think it would be a mistake to try to stay away from risk assets or stocks or anything with a broader market correlation, particularly after, like you said, maybe it has been messy at the index level for a month, maybe 2.
10 weeks.
Depends how you measure it. Sure. So 10 weeks, then the way I would think more is 10 weeks of correction of mess within a broader, longer term primary uptrend. Should we bet on it becoming 15 weeks? I would bet on it ending sooner rather than later, is my point, right? You already got almost 3 months of mean reversion or counter trendness. I would start leaning back in the direction of the primary trend.
I need to see it. Call me old fashioned, right? The reason I have these gray hairs is because I used to anticipate breakouts when I was a young lad. Spencer, can you throw up slide 2 there, please? Because this is a good one. I think this is going to be a good one that Strazza really likes a lot, actually.
Ton of
this
new highs.
one is a big one.
Ton of new highs.
Right? This is a big one. This one's right up your alley, Strazza. So for those of you who think that this consolidation, this messy market that we've been in, again, not my opinion, it's just facts, it's just basic arithmetic, no big deal. But for those of you who are like Strazza and think that these breakouts are coming soon, these resolutions are happening now. By the way, during election years with an incumbent president, the market tends to bottom in May. I don't know if you heard, but we're in May. So from a seasonal perspective, we've got tailwinds versus the headwinds that we were facing earlier this year. That means anything to you. But if you're like me and you got to see it, right? See it to believe it.
Okay.
I think this is one of the most important charts out there.
So we're seeing it throw up the prior cycle highs table. RSP is not a holdout anymore. And I think XLF got it done on Friday too.
Got what done?
Back above the prior cycle highs. Both of them.
Eh.
Throw up the table, Fonz. So we've been tracking it. This is what we've been using internally just to kind of help us navigate through this messy market period where we had a lot of these failed breakouts, right? Which we thought would end up being false starts. And we're seeing that. So we made a list. And when we made this list 3 weeks ago at the April lows, they were all below. Every single one. It was all red. Do we have the list? Let's get that table up. Just put up the old table. So it's really turned green. And the holdouts are really at the sector level, the sector indexes in the US. All the international stuff actually flipped first. And then equal weight NASDAQ, equal weight S&P 500 were actually slow to regain those prior cycle highs. And equal weight NASDAQ is still below them.
Throw up slide 2. This is what a breakout looks like, Strazza. This is what I'm looking for, right? This is what we haven't seen. This is a breakout, folks. You wondering what a breakout looks like? This is what a breakout looks like. Notice how in America that hasn't happened yet. I agree with Strazza that it's probably going to happen. I actually agree with Strazza that it's probably going to happen soon, too, by the way. I'm with you. I got to see it. I got to see it. And by the way, the fact that European financials are already doing it, to your point, Strazza, probably means that in America, they're going to be doing it soon, too. No?
Dude, they're already
this
going.
increase
I don't know what
conviction?
you're talking about with I need to see it. We talked about this. We went through this on Friday.
Now what?
How we made a list of 20 indexes and said when they break back out, we'll be bullish. And
why aren't they throwing it up?
2 of them have broken back out.
Why aren't they putting it up the table?
I don't know. Fonz wants to update it. I said just show the old one.
Yeah, just show the old one.
What we saw is it flipped from just heavy red to heavy green over the past 2 weeks.
Yeah,
So,
it's the direction that these things are going in, right? So if we charted the percentage of these indexes that are above the former highs, the line would be going up.
All
right?
green on this screen. Except for you, equal weight NASDAQ. No, but there you go. You talk about tech as, no longer leadership, at least over the short term. You see it right there. The last one to go. Your old leader. So that's got to change if we're going to want to lean on tech stocks the same way that we did earlier in the cycle.
Yeah, tech stocks are the biggest losers in this market. So if that's going to change.
Come on. The biggest losers maybe this year.
No, maybe not the biggest loser. Real estate's the biggest loser, but real estate doesn't matter. In terms of sectors that actually matter, technology is the biggest loser, right? Isn't it technology or is it consumer discretionary?
So tech is still like the second best sector on a year-to-date basis. So this is
right. But this year-to-date stuff, relax with that because things started to change in February. So a lot of those gains were in January.
Yeah, but even trailing 65 days, kind of middle of the pack.
Last 10 weeks, worst sector.
I can't give you 10 weeks. I can give you 65 days. That's close.
I already counted, Strazza. They suck. I don't know what to tell you.
Okay.
I don't know what you want me to do. You want me to lie to you and tell you that they're doing great? They're not.
Over the trailing month, tech is the worst. There you go.
It's not like I pressed the button. Like I don't actually care whether tech is a leader or not. Like I'm just gonna, right? So year to date, actually, after real estate, consumer discretionary is the worst performer year to date, if you want to do year to date. But for me, things really started to change in February. And as they started to change in February, healthcare is actually the worst. And if you go back and just look at the last 10 weeks, then the worst sector is still consumer discretionary. So you're right, Strazza. Technology is not the worst. Technology is only the second worst.
Carter Morset, fair question. Strazza, when you're responding to the internship DMs, already got started. Had like 5 phone calls Friday afternoon. Some awesome people watch this show.
How about that crazy lady Karen who's tweeting at us, right? What an angry lady that was.
I didn't have a phone call with her, but I heard from like 40 of you. So thank you. That's awesome.
She's like, my son will never work for you. Good. Make sure you tell him that you screwed that up. Make sure you tell your son that you're the one who screwed that opportunity up for him.
I didn't even see that. I stopped reading some of these crazy people. There was one this weekend. I texted Brian Lund. I said, thank you for saying what I wanted to say, but held myself back from saying.
Brian Lund. Yeah. Brian Lund texted me last week and he's like, there was some article because in Napa Valley, the people are drinking less apparently. So a lot of over leveraged wineries that made too much wine are losing a ton of money.
That's funny.
So Brian texted me like the article and I'm like, good, screw them. Too bad. So you are over leveraged in a long only account and now you're blowing up. Nobody feels bad for you.
How do you over leverage yourself with wine? They're borrowing to make wine.
You make too much.
You make too much wine.
Yeah, you make too much wine. Yeah, because remember, it's not like my winery. We could just make as much as we want. Most wineries have to sell their wine to be able to make the money to then make more wine, right? Well, our business isn't like that. We just keep making more wine. We don't have to sell anything. But for people who are in the business of making wine and selling it, they have to make the wine, sell it, get the cash to be able to make more. So, and some of these wines take years to make. So they're They're essentially borrowing from the future earnings, right? They're leveraging themselves. They're using what would be equivalent to margin, and they're blowing themselves up. But who cares? Fuck them. Too bad. You know? It's like, the way I look at it is the same way in the market. Oh, you used too much leverage and you blew yourself up shorting GameStop or whatever. Nobody feels bad for you. Too bad.
Is that Wall Street bets in our chat? What does that mean? Is that like the Wall Street bets that people talk about?
What? Where?
Wall Street bets.
Wall Street Bets follows me also.
Might be on Twitter. Yeah. Is that on Twitter?
Like
not to keep flexing, but
I mean, people get excited when this stock starts, moving like this. What's crazy to me is that a lot of these crazy GameStop laser eyes folks, they still talk about the stock like any sort of fundamental analysis matters.
Steve,
like
I think you have no idea.
Because Roaring Kitty tweeted about it. I don't care about their cash balance. Like, right? At a certain point, it's not about that at all. You can make money in this name, but I don't think it's because of their balance sheet. Or ever it's going to be, or really ever has been for 5 years now.
If you guys want to see the degens, go on Reddit, go to the Super Stonk subreddit. Every stock has its own subreddit. So GameStop, AMC, Bed Bath & Beyond, all of them. Go in there. It's really actually kind of sad. It really is. These people that are still in there every day tweeting about how they're going to make millions. But regardless of that,
Henry asks a good question, a better question for us. JC, you take this. With a stock like this, does RSI 14 on the daily even matter? I'm saying the balance sheet doesn't matter.
But momentum, absolutely. Sure.
Would you
matters a hell of a lot more than the balance sheet.
Sure. But would you get scared of an overbought momentum reading in a name like GameStop that's squeezing?
Well, first of all, overbought momentum readings are characteristics of uptrends.
Yeah,
so I wouldn't be scared of that. It would just be confirmation that this thing's going higher.
Yeah.
It would be weird if it wasn't getting overbought.
Yeah.
I would be more, not scared, but I would be more cautious of the stock if it wasn't getting overbought.
So, yeah, great point.
Yeah.
This thing has now been overbought for 10 straight days since May 3rd and just keeps going. So I wouldn't, a lot of times we use the RSI 14 in a reversionary fashion. I think for a stock like this, a RSI 14 reading of 80, you don't want to run from. Well, sometimes I would probably think twice about entering on a high RSI reading like that. I missed it. I'm not in it. I missed it. We were watching it. We were stalking it. I had alerts set. Wasn't at my desk. And then it coiled so nice last week. You see like 4 indecision candles. Did you see that? Oh, that's textbook coil. Really nice. This is.
Should I bring on Jay Woods?
Please.
Ooh, Jay Woods.
Jay Woods in the house.
Yeah.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jay Woods in the house, live from the New York Stock Exchange, the most important building on earth.
I don't know if it's the most important building, but
name me a more important building on this planet than the New York Stock Exchange. Go.
Pentagon.
Pentagon? What the fuck happens at the Pentagon?
It's where everything happens.
No.
It's,
how many shares were traded at the Pentagon last week?
I think the Pentagon's a little more important.
Bullshit. This is capitalism. This is a beautiful building that represents capitalism. No, the Pentagon is great. The Pentagon is great, but they got buildings all over the place.
Well, right? I appreciate it because people are going to basically say there's nobody down there anyway. It's just machines. But yes, to me, it is definitely home and the most important place in the world. So I will agree with you.
Well, there is nobody down there. It is all machines and some journalists. To be fair, that's not the point, though. That's not the point. All right, Jay Woods in the house, floor governor of the New York Stock Exchange, friend of ours, friend of the show, and just the man.
Yeah, I got dressed up for you guys today, and then I see the hoodies. If I had the memo, I would have put my robe back on myself.
Don't front. You were doing basic cable this morning.
Oh, you saw me? You're up that early. Yeah, 5:50.
I wouldn't know. I saw the tweet. I wouldn't know where to watch basic cable. I haven't had basic cable since like 2013,
Yeah.
12 maybe.
I think it's coming back. All these bundles are basically coming back to regular cable. It's very interesting.
Well, Jay,
Yes.
what do you make of the return of the infamous Roaring Kitty?
Oh, I almost got bumped, speaking of cable shows today, because they wanted to break in with that news. It was so big. What do I make of it? Welcome back. I found him entertaining in 2021. I liked his thesis at the time. The movie they made on him was epic. Great job there. They left out some minor details at the end about why we have circuit breakers and all those things. But hey, listen, it brings retailers back. It brings action to the market. I wouldn't recommend trading these things based on what he may or may not be saying in that tweet. It was just, it's interesting, but now you got to look up the chart. I'm looking at GameStop and AMC for the first time in a while. Actually, that's not true. GameStop broke above its 200-day and was moving last week ahead of this. So maybe someone knew something there.
100%.
Fundamentally,
They were front running the return of the Roaring Kitty.
I don't know. Maybe someone knew something. I don't know. But GameStop finally stopped going down, which is always the first step in a trend change, and then it broke above its 200-day. So technically, it looks better. Is it going to roar back to 400 when it did last time this happened?
Oh, I see what you did there. I see what you did there, Jay.
I did. I know it's horrible. I'll throw
You're
puns
good.
as much as I can.
I see
But
you, dog. I see you.
listen, it's fun to watch. I did trade it the first time it went nuts. Actually, I traded more AMC than GameStop. We'll see. Watch AMC 350. I think that's where we're trading the pre-market. That's the 50-day moving average. Could run to 9 if this thing gets wind in its sails. It's still down 99% from its peak. I know when you go to these chat boards and Twitter, they rip you apart for saying something negative about the stock. But all right, well, if you don't realize you're down 99%, then say all the negative things you want. It's not where you want to be. But these kind of momentum swings, they're something you don't predict. And if you're going to be in it, use your stops carefully because these things will move. They'll move quick.
Jay Woods, over the last 10 weeks, the worst stocks have been technology and consumer discretionary. Year to date, consumer discretionaries are the worst stocks. Small caps suck. I mean, not that they're relevant or anything, but in terms of the actual stocks that are relevant, technology, consumer discretionary over the last 10 weeks, really, really just the worst. Do you think that this is just sector rotation, strength in utilities and staples, and then we're going to be back this summer and fall, back into tech, back into discretionary, back into last year's leaders? Or do you think that this rotation out of those areas is here to stay?
I like the rotation, but let's just step back. What's been leading? Utilities. Utilities. If we had this conversation in December and we're predicting what's going to be the big mover next year by May 13th, and the 10 years at 4.5%, S&P 500 is up almost 10%, and we're led by utilities. It doesn't make sense, but let's look at charts because that's what we do. The utility index is finally snapping back, and then you look under the hood at what's leading. Southern, my God, this thing is on the verge of breaking out on a weekly basis. SO, the symbol there. I like what we're seeing. I don't know if I buy the whole it's an AI play story. That makes you roll your eyes. But this is what we see this, though. We've lived through it. We're seeing GameStop and AMC come back to life. There will be people that will play a Dominion Resources, which is based in Virginia, which runs a lot of the power grid in Washington, D.C. Letter D, by the way, Dominion. That stock has broken a downtrend. It looks great. It looks like 58, maybe 60 here. Great dividend. These stocks are coming back. They've turned, and they may get euphoric. I don't like how they ended the week last week. We should see a pullback, but I think utilities have finally turned the corner where they're going to participate in this broad-based rally. The sector I still love is financials. Financials to me look great. When you look at the XLF historically, it's been around for 25 years. It's been down 10 of those 25 years. The 15 years it's been up, it's up an average of 21.5%. We're up about 10. So it gets streaky. And what do I look at? Price action. And what stocks look great? Goldman, we've called that breakout. That's on its way to 500, give or take a few points. Looks fantastic. Morgan Stanley just joining the party. The leader, which has been lagging lately, JP Morgan, it'll be back if Jamie Dimon stops with his weather analogies and all these bad things are going to happen. I mean, spike the football every once in a while. You are crushing it on all metrics. JP Morgan is the bank of all banks. And then Citi. My God, I don't go too far back and don't go back 20 years and look at where it was before that 10-for-1 reverse stock split, but just look at where it is now. It's broken a nice downtrend, still has a lot to reverse. I think 80 is a good upside target. So the financials, this higher for longer narrative, it's here to stay, and the financials are absorbing it well, and they're starting to lead. And then you got some regionals. It's hit or miss when you look at the regionals, but there's some strength there. And that will help with the small cap play. The small caps, what did you say about the small caps, JC? What was your line? Do they matter? Is that what it was?
Well, we know for a fact that they do not. I mean, it's what, $2 trillion in assets. Like crypto, like they don't actually matter. Like they're irrelevant in the whole scheme of things. But I will say that as irrelevant as cryptocurrencies are, when you look at the charts of Bitcoin, Ethereum, Solana, Binance, they look a lot like the stock market and technology and growth. When you look at small caps, as irrelevant as that might be, they look like the Value Line Geometric Index. They look like a lot of other charts out there. So they're just very good gauges. They happen to be this year anyway, very good gauges of the average stock, the median stock, the majority of what's happening out there, which is a lot of nothing. To Strazza's point, there are things working. To your point, financials are definitely one of them. European financials even more so, but most things have not been working.
No, I agree. And when you think about the whole indexing, is when you get a winner in the Russell, SMCI, great example. What happens? It graduates, it goes up, and S&P 500, perfect example. Uber goes in. What do they boot out? Alaskan Airlines. I mean, I don't have to look at a chart to know I'd rather be in Uber than Alaskan Airlines, the 7th biggest airline in the world, maybe 6th if this Hawaiian merger goes through. Look at
you up on your airline M&A. I see
listen, if they block that one, they block JetBlue and Spirit. I mean, come on, we have bigger things to worry about than JetBlue and Spirit. You can talk about Chevron and Hess getting blocked down the road, fine, but what are we worried about these two airlines trying to survive and trying to merge? But getting back to the whole point is that's what indexing does. It takes the strength. So the stronger indexes are where you're always going to want to be. But I think at some point when this broadening continues, which I believe it will towards the second half of the year, especially fourth quarter, the Russell's got a lot to run. And we saw it fourth quarter last year where ran 20, 25%, and then it paused, it digested it. It didn't continue, but it will join the party. But when these things join the party, like utilities just now, they happen quickly, and you got to be there for the move. If you're chasing now, you may have missed it. So we'll see. But you're right. The Russell is irrelevant from a sense that you'd rather be where the best companies are, and that would be in the S&P 500 every single time.
And by the way, what I mean by they're not relevant is that like all of them can go to zero tomorrow and it's not going to matter. There are plenty of opportunities in small caps, and small caps that have done very, very well, like crazy well in this environment. And that's really been our focus. And that's going to continue to be our focus, because one of the beauties of small caps is that even though the indexes have done nothing, like literally flat for 5 months, that's almost half a year of zero progress for both the Russell 2000 and the S&P 600, zip. The individual components of these indexes tend to be less correlated with the overall indexes compared to something like large cap stocks that tend to move on average more so with the indexes, which is one of the things I love about small caps. So, and by the way, I love trading cryptos also. Just because crypto and small caps are not relevant at all doesn't mean there aren't opportunities. Quite the opposite. I think there are more opportunities there than anywhere else, probably.
Yeah, and listen, it's you got to do your work if you're going to be in the Russell, because the tide will not lift all boats. The sector rotation there is fierce. So Yeah, I have to concur. There are a lot of diamonds in the rough down there, but that's where you earn your money as a researcher, trying to figure out which ones are. So to me, yeah, but the index itself, it's yeah. There could be 100 stocks that go to zero, and it's happened. It will happen again. So we'll see.
So one of the things that's been holding back the Russell, Jay, is the banks. I love what you just said about financials. And you mentioned too that, I mean, banks, financials as a group have had a really good, trailing month since mid-April. Rates peaked and rolled over a little bit, but for the most part, like you said, we're dealing with this narrative of higher rates for longer. It's supposed to not be good for banks. If you look at treasury spreads, there's really nothing appealing for them from a lending standpoint. It's not a good environment, yet they're holding up, they're rallying, they're becoming leaders over the short term. How do you think about that kind of price action in the context of what you talked about?
Yeah, but aren't you talking about large cap banks, Strazza?
Yeah, I focused on large cap. I still think there are some of the regional banks like a PNC that looks like it wants to go. Schwab's had a nice comeback. Truist Financial, that's another one that looks like it's coming back. They still have a long way to go just to get back to those March 2023 levels. And I don't think it's out of the realm of possibility that they don't get there. Comerica, another one. Not Capital One. I'm trying to think. You think about the ballparks, and that's how you get most of your regional banks.
Nice.
It's just, Citizens Bank, the Phillies, of course. How did I forget that one? But yeah,
Phillies looking pretty good this year, huh?
Yeah. Oh my God, the Phils. Yeah. Let's see what happens September, October.
Better than the Sixers, I'll tell you that much.
Well,
the big six.
I'll tell you what. The Knicks. You're a Heat fan, I know that, but the Knicks. It's a hard team not to like. They're just so scrappy.
No, but they're blowing it.
Every time you think, with the exception of yesterday's game against Indiana, that they're down 10, they're going to pack it in. They came back. They did it to the Sixers again and again. Sixers were down 22 in that clinching game, came back, took a 10-point lead, and then blew it. I mean, that's just a testament to the scrappiness of that Knicks team. So high praise to them. But that's as much as I'll go as far as my Knicks talk goes.
I think the Knicks were down 40 going into the fourth quarter yesterday.
Yeah, they weren't coming back. They needed to rest. So we'll see what happens. It's going to be interesting. But as far as the market goes, it's going to be interesting this week. You talk about the major indexes. The Dow, one of your favorite indices. I've read I didn't click on the clickbait headline. The Dow doesn't matter. It sure as hell does matter. Those 30 stocks are pretty darn important.
Who said the Dow doesn't matter?
Oh, CBS Market Watch. Like I said, I didn't click.
CBS.
Yeah, CBS Market Watch. That's all I'm saying.
Wall Street Journal wrote about it this weekend too.
Oh, okay. Yeah. Well, it does, and it's time to rebalance a little bit. They got Walgreens Boots Alliance out, thank God. Intel, what have you done for me lately? Cisco, 20 years, going nowhere. Punch up a chart of Cisco going back to 2000, and you owned it then. Congratulations, you're up a
tell the kids these days about Papa Dow. Do you fight it?
Papa Dow, well, that goes back to the early 1900s, as you know.
Do you fight Papa Dow, Jay?
Yeah. Listen, just put up a chart of Papa Dow against the S&P 500 over the last 50 years, and they're hand in hand. So if I can pick 30 stocks versus 500, then I'm doing all right. I don't know how they do it. It's magic, but the Dow matters. And, every media outlet goes to Dow points when the market has a big move. They don't talk about the S&P 500. When we hit 40,000, which could happen at the end of this week, the way we're going, could happen Wednesday with the CPI, Dow is up 8 days in a row, as someone put on your chat. Best week of the year, slowest week of the year too, by the way. We could roll, and we'll see. I don't know if we're going to break out. What do you think, Straz? We breaking out the new highs this week?
I think so.
Yeah,
I think so.
I think it's too soon.
First of all, who is we, and what are we talking about here?
We, the market, the S&P 500. Owners.
You're saying that the S&P 500 closes at a new all-time high this week. That's what you're saying?
Yeah, it needs like 0.5%. Not even.
42.64.
Yeah, I don't think it's going to happen.
I don't think it is either.
Throw up slide 2. Throw up slide 2. Here you go, Jay.
Here you go. Oh, that's art right there. Hang that in the Louvre. That's unbelievable.
Hold on, it gets better, right? So here's the Easter egg. Can you find the Easter egg in this chart?
The Easter egg in the chart. What is the red line there?
There's no red line. There's a green and red candles chart, and then there's a blue line. What's the Easter egg?
I don't. You got me on the Easter egg. Go ahead.
These lines move so tightly together. You are the floor governor of the New York Stock Exchange. You've been studying markets your entire life.
Mm-hmm.
You got a lot of years on me. I mean, so many years on me.
Okay. Wow.
And yet you can't tell which one is which. I actually flipped the labels. The blue one is actually the Dow. The other
there
one
you
is
go. Yeah. Well done. Well done. That's a great presentation chart right there. Just to, flipping it. That's a
so
nice little play.
when these idiots are telling you that the Dow doesn't matter, smack them.
Yeah.
Give them a good.
Listen, I'm on the same page. Of course it matters. And yes, I know United Healthcare is the most important stock. Microsoft tried to take its place, but it hasn't yet. Hey, let's talk about healthcare real quick. Let me pivot on that. I want to talk about Pfizer. Our friend Josh has been trying to call a bottom on this one for a little while, and I think he may have been onto something. Let's look at this thing technically. When you bottom fish, first of all, it's not a sexy name. It does have a nice dividend. It's boring, but it stopped going down. It has a couple months of higher lows, and it broke some nice little levels here. I think Mr. Brown may have been onto something when he called it, and we'll see if the trajectory continues. But this was a dog. It cured COVID apparently, and then it had nothing up its sleeve. Well, it looks like it's starting to get its act together. There are other healthcare stocks that are not doing that. You punch up Bristol Myers, and you can put that as your prototypical, here's what a downtrend looks like stock. And then you have Merck that is phenomenal. So healthcare has been all over the place, but I think you're getting a little bit of a comeback from some of these beaten down names. J&J comes to mind. So I just was looking for your thoughts on this Pfizer chart. Do you think we got the lows in there? I think we may.
We've been on it too. We were talking about it last week. We're in betting on a failed top.
Throw up. Let's just put things in perspective for the folks who don't look at as many charts as the rest of us. This is what's been happening. Throw up slide 2 there, Spencer.
2 weeks ago.
This thing's really been something, right? Look at that. This is why we do this, guys. From failed moves come fast moves in the opposite direction.
Now
shout out Brian Shannon. Brian Shannon gets a lot of shout outs in this show.
Now show the other one. This goes both ways.
Now show the other one. Yep.
Just drop one.
This is the one I like. So that one, just to put things in perspective. But now here's why I like it, which I think is why Jay Woods likes it. And I know Strazza.
Big breakdown. Yep.
It's the same thing as Apple or even Tesla right now, to a lesser degree, maybe.
And
right now.
Nextera, the utility stock, NEE, same thing.
Love
Disney a few months ago.
It's Pfizer. Staple stocks are breaking out to new 52-week highs. I know it's healthcare, but it's really staples too, right? Do you want to make the bet that after a 60% drawdown in Pfizer, that it's going to go lower in the middle of a bull market for U.S. stocks? That would just be, Disney too. It was the same thing with Disney, JC.
Yes.
Yeah. Hey, we're boring them in the chat. I see. We got to get off of Pfizer, and then Henry said remove it from the Dow. It's already out of the Dow. They got rid of it a few years back. So
they wanted to add more tech. Nice.
I got one. I got one for you, Jay. Throw up the 3M for Jay. While we're talking stocks, stuff is happening over here at 3M. I thought they would have gotten booted by now. I guess they're safe.
They're safe. Procter & Gamble safe. Procter & Gamble breaking out. 3M breaking out on a yearly basis. And now you have, these are the charts I love because the risk reward setups are right there in these simple lines in the sand. All right. If it fails, if it breaks down, then we get out, we limit our loss, but the upside versus downside risk is phenomenal.
This stock not long ago was what they call a dividend king, which means half a century of annual dividend.
Oh, wait a minute. Is that a thing? Dividend king is half a century?
Yes. So 50 years of hiking its dividend. It slashed it.
It stopped.
60 years. Literally the day the stock broke out of this base. The dividend cut was the buy signal of this reversal pattern, at least. So I love that. I think that's great.
Yeah, it spun off, and I'm blanking on the name of the spin, but it spun off one of its parts, and therefore it then cut the dividend. So
Is it
it's
is it this
crazy.
Solventum.
is it Solventum or ENOV?
Yeah, Solventum. That's it. Solventum. Nice
SOLV,
pull.
right?
Nice pull.
No big deal.
Yep.
No big deal.
So anyway.
This is what got me, right? So Strazza showed the short-term chart there, but come on. Look at this guy.
Yeah.
You know what this is called, Jay Woods? I don't know if you heard, but this is called polarity, where former resistance turns into support. It's like a thing.
Yeah. Yeah, I hear you, and it's perfect. I mean, it's just about making money, and this is risk reward at its finest. And yes, we're boring people that you should. I don't know if you read the chat. This is the most fascinating thing in the world. We're boring people to death with some of these charts.
We started with Roaring Kitty coming back. GameStop up 40% this morning, and the Pepe coin pushing $4 billion in market capitalization. So I mean, it's hard to keep that pace. You know,
I know. Well, listen, I don't follow some of these little ones, but yeah, and then punch a Procter and Gamble.
You're not a Pepe the Frog.
Gamble.
You strike me as a Pepe the Frog kind of guy.
Oh, Pepe the Frog. Yeah, I didn't even. This is the first I heard of Pepe the Frog. I apologize. How's Doge doing? Is Doge back too? It must be up today, right?
Yep. 4.5%.
Jesus Christ. It's just like, okay. Hey, let me just quickly pivot while I got you, Strazza. I want to give you a shout out, you and your friend Sean. The feedback, I did a podcast with you, I don't know how long ago it was, called Off the Charts. A little spin-off from other stuff you're doing. The feedback that I have gotten from that has been phenomenal. So I just want to thank you for that opportunity to talk about other things than charts. It was a little weird in the first 5 minutes. Like, wait, we're not going to talk about the market. But you know, the people that I've worked with over the years, they got in my ear and they said that was the coolest thing we've seen. So I appreciate that. And I never knew I wanted a forum like that or needed one. And I thought when you released it, it would be like, you know, 2 views, and the thing took off. So I appreciate that.
It's been a really fun exercise for us, and thanks for being on the show. Jay was our first inaugural episode. Couldn't have thought of someone better. But it's fun because it's so different for us. We call it Off the Charts because there's literally no charts allowed. We don't want to talk about the market. We want to talk about you and your life and what that means for your trading and your career. But we're trying to stay off the charts, and we're doing a good job at it. Shout out Caleb in the chat. He's going to grace us.
Yeah, Caleb. Great guy.
He'll be on episode coming up. So, yeah, that was fun, Jay. Great conversation.
All right, JC, back to you. What else are we looking at?
No, I want to give a shout out to you guys. I just love the concept of off the charts, especially for a crew like ours that is like very chart focused, obviously. You know, talking about the things, you know, the peripherals around the charts, you know, the executions and the, you know, the thought process and the psychology behind it and the lifestyle. And, you know, we talk a lot about, you know, we want to be able to sleep at night and this and that and different time horizons and objectives and risk parameters. And these are such important concepts that have nothing to do with a chart that I think are just great conversations, you know, with yourself and a lot of other friends of ours.
Yeah, and that's why a show like yours is so great, and the Twitter community and the other communities that I may or may not be involved in at times. It's good to be able to tell stories with people that can relate to them. You know, you don't want to be telling winter stories all the time because you don't learn from a winter story. In fact, I mean, you can learn, but you need to check yourself because you know things won't stay like this. You know, you may play GameStop for the next few days and have some fun, but gosh, be careful.
You want to know what I heard the other day? This was a great quote that taking a loss is just an unmonetized lesson.
Oh my God. Listen, the only
great?
reason I'm still in this business is because I limited my losses. I've taken horrible losses where my instinct was right. I just mistimed it and I got out and, you know, I set my stops too close. Like, these things are going to happen and they're the most frustrating things. But I've also taken losses in stocks that could have been disasters. Let's just talk about AMC. When I lived through that, I was home, stuck in my house like everyone else was, and I had my then 15-year-old son, who's now 19, with me, and he's yelling at me because I bought it at 4 and sold half of it at 8. And I've been around long enough to know you get a double, you're going to take half that off the table and free roll. And then I sold some at 10, at 12, 15. By the time it hit 20, I had like 100 shares left. I was out. And I don't look back on that trade and said, "Oh, I missed it. It went to 40." I'm happy I got a part of it and I managed my risk. I mean, hindsight's always 20/20. I was in Google on its IPO day. I tell this story all the time. It was just under 100. I sold it at 150. All right,
that was a hero.
That was my goal. All right, I didn't know, and full disclosure, I bought it back for that 15-year-old brat who yelled at me for selling AMC for his college fund. What do you have young kids, JC? You have a birthday party. Here's $100 for your kid, and it adds up. Like, oh, I got $1,000 for throwing this party for my kid. What I did for each kid is I put it into a stock, and my third got Google, and he paid for some of his college. We'll see if
here's a good lesson. Here's a good lesson, and then we'll go to the final trade. So I was contributing $300 a month to the kids' college fund. I got 3 kids, so basically a G note a month to college funds. And I'm like, oh, I'm doing the right thing. I'm being a good father, responsible, blah, blah, blah. So I thought. So now I'm on the phone with my financial advisor. So Ritholtz Wealth Management handles my this sort of stuff for me because I know nothing about this stuff. I've learned a lot. and I'm talking with my advisor over at Ritholtz, and he's like, I'm doing good, right? $300 a month. He's like, bro, at this rate, you're not even going to get your kids through their sophomore year.
Yeah.
I'm like, are you shitting me? The number is you need $100,000 in that account per kid by the time they're 5. That's the way the math works out.
Well, I got lucky. Or you need a market correction and cash on the sidelines. And I'll never forget it during the financial crisis. Oh, my God. I took a lot of money out because I got nervous. I worked for one of the large banks at the time, Goldman Sachs. That stock went down to 47 intraday on this low. That was the end of the world. I saw my friends at Baron Lehman go out, and I panicked and I sold, and I had a lot of cash. And I remember just looking at my friends. I'm like, listen, if this goes to 0, then we're all homeless. I'm back in, and I went mostly YOLO in the 529 plan for the kids because I'm like, all right, we're gonna either they're not gonna go to college because I can't afford it because everyone's out, or we get in. And they were 8, 6, and 4 at the time, I think it was, and that was the greatest call I ever made. I didn't benefit from it, but I mean, I guess
wasn't it your boy Art Cashin? Never bet on the end of the world because there's going to be nobody on the other side to pay you off.
Why when the missiles are in the air? Because if they crash, the trades won't settle. What's it matter? That's basically the old Art Cashin adage.
Jay Woods, final trade. What do you like? What are we buying?
Final trade. I still like some of these utilities. I'm going boring. I like the boring stocks right now. The risk reward setups are in my favor. Of the utilities I like Southern. I think that's a nice breakout about to happen on a weekly. I still like the financials over the next 6 to 12 months. Citi would be my name there. Wells Fargo, also a nice rounded bottom breakout, a retest, and then it went back up. That's another good name there. And Amazon, my God, get above 190, close above 190, and just go. It's finally made that full roundabout. So if you're looking at Magnificent 7 stocks, I think Amazon's the one poised to make the best move. And I can't wait to see NVIDIA's earnings on May 22nd. We'll see what happens there. So
I love it. Jay, you're welcome back anytime, my friend.
Love joining you guys.
I was a big fan of yours. Big fan.
All right. Be well.
Adios. Jay Woods.
Yep.
Legend.
Hadn't been on the show in like 6 months, so
that's rude. Is that your fault or because he couldn't?
I mean, we got one guest today. We got a lot of friends.
I didn't realize
it's your fault, Spencer.
That's not okay. I talked to him on the spaces. We had him on the pod, so it didn't feel like that for me.
All right, my bad.
Wow.
Come on, Spencer. Listen to the chat. You got to give the people what they want, Spencer.
Sorry, Jay.
Wait, I don't know my GME up right now. Is it actually halted?
Talked enough about it.
I like how it's your GME.
Listen. This isn't Reddit. It's also not Twitter. We've spent enough time on GME.
All right,
It's
fine.
having fun today. There are other stocks that are also heavily shorted that are making great moves today that we haven't mentioned.
Throw up that table one more time there, Spencer.
Oh, they've
so the
halted
folks
it.
can
It's a
see.
conspiracy. It's a conspiracy.
What's a conspiracy?
Throw up the goddamn table. People, what? They're saying the tweet wasn't real now?
No, I'm saying that they're going to say, the idiots are going to say that the trading halt is a conspiracy.
Oh, it's halted already? I like this Wayfair JC. I really didn't know what these guys were all about. I got involved on Way Day last week. I bought some bedside tables.
Way Day.
Way Day. It's Way Day. It's like their Prime Day. So I was shopping the deals. Need some cheap stuff. Can I build it? Is the question. I will update you. Give me a day. We'll see how I do.
You should, man.
I'm gonna take a shot. I'm gonna take a shot.
We spend.
Hold on. Build what?
You got to build these things. That's why they're so cheap.
What the
Or you
things
pay
you buy on Wayfair?
You could pay like $85 and they'll come
Anything.
for you.
I was going to say, you took the words right in my mouth.
What?
Don't waste your time, bro. Don't waste your
Hey?
time because number one, you suck at that.
I know.
So pay the money. Number one, you're not going to have to do it. Number two, it's going to come out better.
Yeah. You think?
Definitely.
Feel like a loser if I can't build these things, though. You
No.
know.
Well, Steve, what is it? Steve, what is
The
it?
reason you work hard and you make as much money as you do, so you can pay other people to do shit that you're not good at and you don't have time to be doing.
Steve, what is it?
No.
2 bedside tables, and then I got like a center table for the living room.
Bedside table. Come
Easier.
on. Bedside table. You can do it. You
Don't
can do it.
Don't do it. Pay someone to do it.
Dude, it said something crazy. It said like time like 2.5 hours or something. I was
I'm
like,
telling you. Don't do it.
Yeah.
These people are like,
we just spent.
how I grew up is that we do things ourselves. That's
I'm with you,
bullshit.
Jason. You know I'm usually with you.
Do the math. Do the math on what your time is worth and then what it costs somebody else. Their time isn't worth anywhere near the amount that your time is worth. It's not even close.
So this is an economic theory, and it's called the law of comparative advantage, right? It's simply that it makes the point that the world would be a far more smoothly functioning place if we all simply did what we're good at and then outsourced the things that we weren't good at to people who were good at those things.
Yeah.
But it doesn't change the fact that, my girlfriend thinks I'm a loser if I can't build a bedside table.
Yeah, then show her your paycheck.
Steve,
I don't want to do that either.
you guys can do it together as a bonding activity. My wife and I spent 5 hours just yesterday and the day before assembling backyard furniture, a table, and 6 chairs.
You could have been at brunch drinking champagne.
Yeah, but it was we spent the whole day together.
It's
building shit.
free. I don't know if I would enjoy that as much as it sounds like you did, but
And Spencer doesn't have any kids either.
no kids. You got no kids.
When you got kids, that is out of the question. 5 hours building shit with kids? No.
Yeah. You got no kids.
Yeah,
I
look,
I got 2 cats.
you're not wrong.
I know what it's like.
You're not wrong. I'm just saying bedside table. Now, if we're talking like a dresser, maybe those are hard.
Listen,
Bedside
I'm gonna
table.
report back. I'm remaining open-minded. I'm going to look at the box. I'm going to count.
Come on,
the screws.
Strazza.
I'm going to
Hire
make.
someone to do it for $20 an hour.
I always.
Also,
have. I always have.
because it's Wayfair, Steve,
Really
there's a
handy.
decent chance you could just go on YouTube and find a video of it.
JC, it's the time thing for me. Like, we'll see.
All right.
I'm going to try.
Do the
Whatever.
math on what your time is
I
worth,
hear
and then
both
do the
of you
math
out.
on what the other person's time is worth, and it's a tiny fraction of what your time is worth.
I don't care what I only care about my time, but for sure.
Yeah, but do the math, right?
I know that.
You're going to pay them a fraction of what your time is worth.
It's an underrated bonding activity, is all I'm saying.
If you don't have kids,
He doesn't have kids.
I have
yeah, but he
cats.
has golf. He could be playing golf.
That's right. That's right. So that's exactly what
I mean, and if anybody needs improvement in their golf game, it's Steve Strazza, So
Oh, I can't wait to show you. July can't come soon enough. Oof. I'm excited. Getting good. Feels great.
I'll take the under.
All right. Let me do
You're
a
playing
couple
these
of
these flat earthers, courses. Come over here. We'll play a real course.
It's a Reese Jones course. It's semi-challenging.
Stop it.
let me do a couple headlines and then we'll do a hot corner and then we'll bring on
Yeah.
Mr. Cully real
Love
quick. Just a few things on the list. Not a lot today. Squarespace going private off the board, $44 per share.
That ticker? SQSP.
SQSP. I don't know how I'm not counting, but there's definitely a decent number of companies that went public in that post-COVID bubble that are now off the board at much lower prices. So SQSP all-time high was 60 something, and today off the board at 44. Kenvue, which is the spinoff of Johnson & Johnson, announced today that J&J is exiting their Kenvue position. They are selling all $182 million worth of, 182 million shares worth of Kenvue that they own. This is KVUE. This is the consumer products unit of
shares. I know what it is.
Yeah, Tylenol, all that stuff. So J&J is exiting that business entirely, selling all 182 million of their shares.
Yeah, that's 3.6 billion. So they owned about 10% stake in the company. It's it's not nothing. That'll put pressure on the
stock. Yep. And then last one, which is small, but Bitfarms was supposed to have earnings today, but they don't because they fired their CEO and delayed earnings. So BITF, not good there. Not much in the way of earnings.
I'm sure it's fine, right, Strazza?
Yeah, I'm sure it's fine. We have not much tonight. We have Petrobras, we have StoneCo, PaySafe tomorrow, Home Depot, Alibaba. So Sony, that'll be tomorrow morning. We did have 10-cent music, but I don't know how much you guys care about.
We care a lot, actually.
Of course we do.
We've been along this stock.
It's the China stock that we care the most about, actually.
Yeah, that's true.
Absolutely running this one since last year.
It does look different.
It was a good report.
It looks like they also declared a dividend in addition to this report. I think that might be a new dividend.
10-cent music?
Yeah.
No kidding.
13.7 cents per share.
Strazza's like, what business do these people have paying a dividend?
What a flex.
Annual dividend. It's an annual dividend.
Content company. It's music software.
Yeah.
Badass. All right, 10-cent music. And listen, 10-cent Parrot company has been trending really well, up another 3% today here as well. It looks different than the, I would say, blue chip Chinese tech behemoths. 10-cent.
Yeah.
Looks a lot better than the others. And don't get me wrong, a lot of them are ripping off the lows. We're in JD. I'm in a little bit of BABA too, but 10-cent looks better than all of them. The more you zoom out, the more you see it.
Do you have a hot corner, or should we bring Ian on?
Yeah, I could do a hot corner.
All right, we'll do it quick because we got Ian here.
Okay.
So hot right now.
And yeah, Dawson, BABA earnings tomorrow morning. I'm interested too. I'll be watching that one. We'll talk about it on the show tomorrow for sure. So look,
because those earnings can definitely be trusted.
I mean, you got the market's going to move on them. Probably.
Yeah, don't worry. They're definitely not lying to you. So,
whatever. All right. Kemper Corporation, KMPR, Gerald Lauderman. Is this Piker? 300 grand? Is that enough for you?
No.
Not enough? All right.
$300,000? Really?
This is the part of the show where
for
Jason
for an insurance stock, that's all you got, Gerald?
Out how wealthy they are.
Come on.
All right, throw up the chart though. Good chart.
Come on, Gerald. Step it up.
Another good one is Celestica, CLS, Whale Rock Capital Management. This is an original Form 13 filing, so this is the most material transaction that popped up on today's list. Look at this one. They're buying into what's already pretty sweet uptrend here. This one broke out early. So this is a cycle leader for sure. What's the market cap on it? Let me just double check that. 5.7. Hey, mid cap land. This one looks good. Electronic components in general have been leadership within their sector, right? So there's a trend within tech right now where it's electronic components. I'm looking at just the trailing 1 month now, where tech has struggled. Talked about how tech's negative over the trailing month, but electronic components up 7%. Electronics and computer distribution, 5%. Computer systems, 5%. Technical and scientific instruments, 4%. Communications equipment, 4%. Consumer electronics, 3.5%. The theme there is it's all hardware. It's hardware. It's legacy tech that's working far more than software. modern day tech. So this is a part of that theme. I like that. Can always find strength, right? Even in an environment where, yes, tech stocks aren't exactly where we want to be fishing at a sector level. When we run our industry lists, electronic components are ranking high still today and have been ranking high for weeks now. So I would look there. You know, Todd Gordon was on the show yesterday talking about Dell, all the same kind of theme. Dell's making new highs here today.
Todd Gordon was on what show yesterday?
Last week.
Hmm.
On our show last week. I didn't say
Yeah,
yesterday. Did I say yesterday? Anyway, that's it for the hot corner. CLS looks good. It's nice when you get a chart like this that's experiencing some insider buying. Typically, they're moving down and to the right when the buying is happening. This one, buying strength, so that really stands out. All right.
All right, guys, the hot corner. It's a free daily note. It's in your inbox every day by like 8 a.m. All the biggest insider trades. It's the link to get it is in the description on YouTube. Do it, get it daily. All right, Mr. Ian Cully, let's talk some thick.
Morning, guys.
Mr. Cully was popping, buddy.
Whoa!
No. It's hanging.
You shave your head?
Yeah.
He's been shaving it. Where you been?
We keeping it pretty close there for a while.
I don't know
Yeah.
if I've seen it that short.
I missed the afro. What's just tell me the story. What happened to the fro?
Oh, it's just easy.
It's too
Just
much
shaving
work.
it's easy. Yeah, it's just, I got 3 kids now. And
Yeah. Tell Spencer that when he's got 3 kids, you can't be spending 5 hours building furniture. This guy.
just not an option.
Not an option.
Not
Not
an
even an option. 5 hours building furniture. You fucking crazy.
I don't know, podcast or something.
What took you 5 hours to build?
It was
Nothing,
it was a 7-piece set.
I'm just thinking about it.
It doesn't
So-
even matter.
Think
It
about
was, it was a table and 6 chairs. It wasn't hard. It was just time consuming.
I think back to when I didn't have kids and I had all this time in my hands. Like, what did I even do with all my time? Like, I had all this time. Like, I could have started a new country. I could have been like George Washington. I had so much time on my hands. Are you kidding me?
I used to think I was so busy.
Right.
before kids. So busy.
So busy, dude. You don't know anything, which is hilarious. All right, Ian Cully. Let's talk about metals. I want to talk about energy. Energy, was that in the XLE? Was that a kickback to those former highs, successful retest, or is this going to fail? Talk to me about the strength in copper, resilient new highs as we speak. What are your thoughts?
Metals are looking really good right now. I prefer metals over energy. At the same time, crude oil hanging above that 78.50 level, it's really impressive. If crude breaks down below, decisively breaks down below 78, I think, we're in an environment where a lot of those names that are squeezing higher right now are going to continue to squeeze higher, and that list is just going to grow. Broader equity indexes are going to rally. Tech, discretionary are going to start to outperform. Now, on the flip side, above 78.50 in crude, and this is a successful retest for crude oil, crude catches higher, than energy outperforming, while tech and discretionary take a back seat. We'll see. I mean, it's a big level. We'll see what rates do here. I think rates are going to roll over, but a lot of that depends on how crude reacts.
Do you think rates roll over? Dollar rolls over too?
Yes.
So these little consolidations, these things are breaking down. These things start falling apart.
Yes, if they follow crude's lead, and crude continues to catch below 78. So that really has my attention right now.
This might be the most important chart on the planet right now. I think
Yeah.
I think the 3 of us might agree with that. Strazza,
Yes.
are you gonna argue, or you agree?
No, I agree, and I think if what Ian is saying is true, and those roll, you want to be long banks. Yeah,
You don't want to be long tech?
Yeah.
you want to be long.
100%.
You want to be so freaking long regional banks, dude.
What about tech?
That too,
Yeah.
particularly speculative tech. You want to be long ARC. You want to be long small caps. You can be long biotechs. You can be long real estate stocks. Banks are going to rip. They want it. Jay was saying it. They're holding up too well in an environment where they shouldn't be. If rates roll here, go time.
European banks, 6-year highs, man.
The majors are calling it. Big banks all around the world are calling it. And I think you see that strength move down the cap scale, regionals, down the cap scale everywhere. Small cap tech, speculative tech, right? Biotechs. Yeah.
And with rates falling over, I think it's back to metals. Metals are going to do well in that environment as well. And they already are. Copper's hanging in there. Silver running back towards that 29 level. We're
That's
seeing
interesting.
zinc,
You think metals
aluminum.
do better?
tin.
You think metals do better with lower rates?
Yes,
Nice.
I do.
All right.
I
Let's
do,
go.
absolutely.
Not energy, though.
Not energy. No.
I think odds still
I think
favor.
that's right, by the way. I agree with all that.
I hope it's right.
At
I
least
think-
in the near term,
Yeah.
bigger picture, we'll have to see.
And look, when you look at copper, silver miners, you're right, Ian. I'm sorry, copper and steel miners, they're setting up. Really
are.
nice. Look at
They are. Platinum broke out last week
Did it finally?
on Friday. Yeah, solid close heading into the weekend. That's a positive development.
What's the
for
deal with
just
this?
metals in general.
What about
Can
the
we buy this?
consolidation in GDX, man?
Hey, can we buy this PPLT ETF or it's sketchy?
No, we can buy it. I
Yeah,
don't
no, you can buy it.
know how
Nice base. Yeah.
much trades. I highlighted it a couple weeks ago.
160,000 shares. It's $1 billion in assets. It's not nothing.
Yeah,
Highest level since last June.
and palladium's hanging in there. So those are your two precious metals that kind of toe the line.
Is palladium a
between-
precious metal, or is palladium a base metal?
I mean, it's a good question for platinum too.
Really? Isn't
Yeah,
platinum definitely a precious metal?
It is, but it also has a lot of industrial use cases.
They all do. So does silver.
Yeah.
Now that silver and gold, now that everybody's talking about them and I'm long, are they going to roll over now? They're going to leg higher? What do you think? They need time?
I think they're going to.
Strazza's New Year's resolution was to not look at precious metals charts, and my New Year's resolution was to drink less Italian wine. And I'm pretty sure Strazza's looking at more precious metals charts, and I'm drinking more Italian wine.
We should do the opposite next year, JC. Right?
Dude, I'm drinking so much Italian wine. I'm in this like Nanico kick, some Campania, Southern Italy, dude. I can't. Sickening.
Yeah. So what Italian wines do you drink when the weather warms up?
When the weather warms up,
Yeah,
like
when it
on
starts
a
to get-
hot day,
Yeah.
dude, frappato all day, bro. Frappato.
Okay.
Slightly chilled. If you want to go red, it's a Sicilian wine, frappato. If you want to go white, you could do anything. You could drink Vermentino, Bedicchio. You could drink, those, stick with those. I mean, we could go on and on, but whatever you do, just don't drink Pinot Grigio. Like, just don't do it. Don't drink Pinot Grigio. Like, you got to be some kind of, you're a special breed if you're drinking Pinot Grigio.
Guy, yo, hit the recess. We could talk more about wine, and let's just do this. I got a recess.
Drink anything but Pinot Grigio.
No Pinot Grigio.
Overpriced. Not necessary.
That was the first one.
It's abundant on U.S.
Right.
shelves.
Yeah, because most people are dumb.
So
And another thing, don't drink that cheap American wine because they're putting glue and acid and all kinds of poison in it. If you're gonna drink inexpensive wine, there's nothing wrong with that. Drink the European stuff. Drink the Italian stuff. Drink the Portuguese stuff. Drink the Spanish stuff. The French, they're not gonna give it to you that cheap. But Italy, Spain, and Portugal, especially Italy and Portugal, you're gonna be able to get really, really inexpensive wine, $7-8, and they're not gonna poison you like they will in America.
Okay. Good to know.
listen. Good. We good with the wine? Sorry.
Yep, we're
Throw
good.
up the freshly squeezed table. This is just the environment we're in. I mean, this is bull market stuff. GameStop's up 100% here today. The more important point is it's not just GameStop. You could see that in the far right.
GameStop's up 100% today.
But you could see in the far right column, This is a universe. Everything on this list has an unusually high, a very high short interest, right? And they're all up a lot. That's just the trailing 10 days. These stocks are working. This is the return of the animal spirits to equity markets. This is bull market stuff. I'm very excited for it. We'll have a new freshly squeezed report out this week.
Remember, beginning of last year, these things were all squeezing.
We've been talking.
Smells familiar.
Everybody's excited that the Roaring Kitty sent a tweet in the middle of the night last night. You just watch our show. We've been talking about how squeezy it's getting out here for weeks now.
That's a great point.
I love this list.
Yeah, it's a great list. PK, no, I do not put glue in my wine, but my wine's really expensive. My Cabernet is going for almost $200 a bottle. So
just like, you don't put fruit in your beer, he doesn't put glue in his wine.
And then you have these serial killers who put orange juice in their champagne. They should be shot on the spot.
I'm with you on that.
Imagine putting orange juice in your champagne. What kind of idiot you need to be?
Oh, what's wrong with a mimosa, man?
Every time I go out to brunch, I just stare across the table. I'm like, oh my God.
Mimosas, man.
Dude, if you put orange juice in your champagne, Spencer, I'm never talking to you again.
It's even better without the juice.
First of all, if you're making mimosas with champagne, you should just be crucified.
What else do you make it with?
I don't know, the cheapest, most garbage sparkling wine you could find. Definitely not champagne.
Yeah, you're right.
All right. My recess
You
was
put ketchup on your ribeyes too?
Of course not. No.
Champagne bacon is so good. You ever do champagne?
First of all, anything with bacon is good.
Yeah.
Anything with champagne is good.
There's something about like crispy and crunchy stuff in champagne, though. Isn't there?
Yep.
Something there.
Yep.
Party in my mouth.
My recess was going to be just quick story. Yesterday, did something I don't think I've ever done before in my life. I locked my keys in my car when I was out running errands.
Smart for that now? Don't they know that the keys are in there and they don't lock them in?
Well, actually, it wasn't my car. It was my wife's car. She has an older car, so she doesn't have like a keypad or anything like that. So I called like the non-emergency police. I was like, "Can you guys help us out?" They're like, "No, we don't do that anymore. Not unless there's a person or an animal locked in your car. Is there anyone locked in your car?" And I said, "No." So they're like, we can't help you." So I said, "All right, thanks." And then thankfully, the window was open just enough for my wife to like squeeze like all the way down in her arm, and she unlocked the door and saved our ass because we would have had to pay.
You should know how to use a crowbar.
Yeah, right.
No, do you have AAA though?
No. Yesterday was when I realized I didn't have AAA. It never even occurred to me before to get AAA.
What is the non-emergency police? Like, what's the phone number for that?
You have to Google it for the town.
Oh.
I don't know. I had to Google it. I don't know.
They said no.
No, they said we won't help you unless there's a person or an animal in the car.
So what did they suggest?
Lied.
They suggested to call a car place.
They said call AAA. That's what they said to do. Yeah.
Yeah. AAA is great with that stuff. I've used them many times over the years.
Yep. Yeah. Anyway, that's what I got. Ian, what do you got?
Oh, I went to Dreamland skating rink this weekend for my niece's 10th birthday party.
Is this ice skating?
Skates on.
No, it was roller skating.
Out there.
Quads or inline?
Well, you get to, mostly quad.
Nice.
Growing up, we used to go there all the time.
That's awesome.
School and stuff, and it was a throwback. It was definitely a throwback. Music has changed a little bit. They weren't playing any Salt and Pepper, but it was fun. It was lots of fun. The kids were, and doing.
I like the Salt and Pepper shout out.
I'll bet Ian had a pair of roasties
What a man.
back in the day. He was getting out there at the skate park.
Ian was breakdancing in the middle. He was one of those guys.
He was grinding rails.
Yeah, I was swinging to the beat.
We are on halt number 5 of the day for GameStop.
Nice.
Lowe's keeping score at home. $36.
110% so far on the day. Not bad. Shout out, Roaring Kitty. I see you.
There we go.
The Trump coin's up 10%.
But this is the stuff, right? You're talking about the Trump coin up this, the GameStop up 100%, been halted 5 times. Is Bitcoin supposed to not break out?
I don't think Bitcoin has anything to do with this, man.
It absolutely does. It absolutely does. It's offense. It's risk-on behavior. It's people looking to go as far out on the risk spectrum they can to make as much money as they can in a market. This is all similar. It's all
Nope.
related. Yes, absolutely.
You're the
Has
one
that
who
changed,
says that
though?
crypto is in the communication sector. The communication sector is down today.
I'm talking about risk assets. It's a risk asset story.
No,
Get long the risky stuff, people. It's go time.
no. I don't
Take
think I don't think at this point in the cycle it's that clean, because Strazza, a year and a half ago, almost 2 years ago, correlations were 1. Everything spiked. Correlations have been coming off. So no, I'm not going to agree with you on this one.
The fact that they're running
I think they're different.
The fact that they're running these squeezy names, and it's not just GameStop. It was Carvana 2 weeks ago. It was something before that. Chewy the week before that, right? They're running these squeezy names. This is just an environment where risk assets are going to outperform the riskiest.
I'll tell you this. It's not bearish for Bitcoin and technology. I just don't know how bullish it is. I think you treat them separately. I'm not saying they can't break out. In fact, I think they do break out. I just don't think we're talking about the same thing here, Strazza. I don't. I think they're two different things.
GameStop's mooning. You're talking about the Trump coin. Are you more likely to see ARK or high beta stocks make new highs or new lows in an environment where you're saying the things that you're saying?
Again, I'm not saying it's bearish for those things. But I just don't know how bullish it is. I think
not bullish.
Huh?
It's not bullish.
Right?
It's at least some level of bullish.
Yes. I just don't think it's to the degree that you're suggesting.
Bull market season has returned.
It's been bull market season for almost 2 years now.
Ow, listen to you. Hey.
Wow.
It's just math, not my opinion. Facts only.
All righty then. All right. It is Monday. We do the Flow Show on Mondays. Strazza and Sean will be live at 11:30 Eastern Time. Come back for that right here on the channel. Thanks to Ian Culley. Thanks to Jay Wood. Thanks to all of you in the chat. Check out our links in our description for all of our good research and good notes. And go make some money.
Strazza, Goldbelly's having a special on Luminati's Pizza in Chicago. I would not order it at all. It's terrible. It's unedible. Don't do it.
I thought you were going to suggest I order deep dish. Don't worry.
No, it's not even pizza. It's in the casserole category. It's like this soupy mess of like a wannabe pizza. It's gross. You people in Chicago should be ashamed of yourselves.
I'll have a lasagna. All right.
See you guys.
See you guys.
I can't take no loss. I don't even know what it costs.